वेलकम टू वी लर्न में आपका स्वागत है। सब्जेक्ट हायर परचेज एंड लीज फाइनेंसिंग, सेशन नंबर 3। टॉपिक टू बी कवर्ड इन दिस सेशन: हायर परचेज एंड लीजिंग, अकाउंटिंग बाय लीजेस, अकाउंटिंग बाय लेजर्स, मैन्युफैक्चरर्स डीलर्स लेजर, अकाउंटिंग बाय द सेलर्स lessee, disclosures by lessee, disclosures by ledgers, and now hire purchase and leasing. Those hire purchase contract which are of a financing nature should be accounted for on a basic similar to that set out below for finance lease. Conversely, other hire purchase contract should be accounted for on a basis similar to that set of out below for operating lease. Accounting by leases: a finance lease should be recorded in the balance sheet of a lease as an assets and as an obligation to pay future rentals. At the inception of the lease, the sum to be recorded both as an assets and as a liability should be the present value of the minimum lease payments, derived by discounting them at the interest rate implicit in the lease. Accounting by leases: in practice, in the case of a financial lease, the fair value of the assets will often be a sufficiently close approximation to the present value of the minimum lease payments and may in these circumstances be substituted for it. The combined benefits to a lessor of a regional development and other grants together with capital allowances which reduce tax liabilities may enable the minimum lease payments under a finance lease to be reduced to a total which is less than the fair value of the assets. Accounting by leasing: rental payable should be apportioned between the finance charges and a reduction of the outstanding obligation for future amounts payable. The total finance charges under a finance lease should be allocated to accounting periods during the lease terms so as to produce a constant periodic rate of charge on the remaining balance of the obligation for each accounting period or a reasonable approximation thereto. An assets leased under a finance lease should be depreciated over the shorter of the lease terms as defined in paragraph 19 and its useful life. However, in the case of a hire purchase contract which has the characteristics of a finance lease, the asset should be depreciated over its useful life. Accounting by ledgers: the amount due from the lessee under a finance lease should be recorded in the balance sheet of a ledger as a debtors at the amount of the net investment in the lease after making provisions for items such as VAT and doubtful rentals receivables. The total gross earning under a finance lease should normally be allocated to the accounting periods to give a constant periodic rate of return on the lessor's net cash investment in the lease in each period. In the case of a hire purchase contract which has characteristics similar to a finance lease, allocation of gross earnings so as to give a constant periodic rate of return on the finance company's net investment will in most cases be a suitable approximation to the allocation based on the net cash investment. In arriving at the constant periodic rate of return, a reasonable approximation may be made. An allocation may first be made out of gross earning of an amount equal to the ledger's estimated cost of finance included in the net cash investment calculation, with the balance being recognized on a systematic basis. Tax-free grants which are available to the lessor against the purchase price of assets acquired for leasing should be spread over the period of the lease and may be dealt with either by treating the grant as non-taxable income or by grossing up the grant and including the grossed up amount in arriving at profit before tax. Accounting by ledgers. Where treatment B is adopted, the ledger should disclose the amount by which the profit before tax and the tax charge have been increased as a result of grossing up such grants. An asset held for use in operating leases by a ledger should be recorded as a fixed asset and depreciated over its useful life. Rental income from an operating lease, excluding charges for services such as insurance and maintenance, should be recognized on a straight line basis over the period of the lease, even if the payments are not made on such a basis unless another systematic and rational basis is more representative of the time pattern in which the benefit from the leased assets is receivables. And now manufacturers or dealers ledger. A manufacturer or dealer's ledger should not recognize a selling profit under an operating lease. The selling profit under a finance lease should be restricted to the excess of the fair values of the assets over the manufacturer's or dealer's cost, less any grants receivables by the manufacturer or dealer towards the purchase, constructions or use of the assets. Accounting by the seller or lessee. In a sale and leaseback transactions which result in a finance lease, any apparent profit or loss, that is the differences between the sale price and the previous carrying value, should be deferred and amortized in the financial statements of the seller or lessee over the shorter of the lease terms and the useful life of the assets. If the leaseback is an operating lease, any profit or loss should be recognized immediately, provided it is clear that the transaction is established at fair value. If the sale price is below fair value, any profit or loss should be recognized immediately, except that if the apparent loss is compensated by future rentals at below market price, it should to that extent to be deferred and amortized over the remainder of the lease terms, or if shorter, the period during which the reduced rental are chargeable. If the sales price is above fair value, the excess over fair value should be deferred and amortized over the shorter of the remainder of the lease terms and the period to the next rent review, if any. And disclosure by lessee. The gross amount of assets which are held under finance lease together with the related accumulated depreciation should be disclosed by each major class of assets. The total depreciation allocated for the period in respect of assets held under finance leases should be disclosed by each major class of assets. The information required by paragraph 49 may, as an alternative to being shown separately from that in respect of owned fixed assets, be integrated with it such that the total of gross amount, accumulated depreciation, net amount and depreciation allocated for the period for each major class of assets are included with similar amounts in respect of owned fixed assets. Where this alternative treatment is adopted, the net amount of assets held under finance lease, including in the overall total, should be disclosed. The amount of depreciation allocated for the period in respect of assets held under finance lease, including in the overall total, should also be disclosed. The amount of obligations related to finance lease net of finance charges allocated to future periods should be disclosed separately from other obligations and liabilities either on the face of balance sheet or in the notes to the accounts. These net obligations under finance lease should be analyzed between amount payable in the next year, amount payable in the second to fifth year, inclusive from the balance sheet dates, and the aggregate amount payable thereafter. This analysis may be presented either separately for obligation under finance lease and where the total of these items is combined on the balance sheet with other obligation and liabilities by giving the equivalent analysis of the total in which it is included. If the analysis is presented according to above, a lease may as an alternative to analyzing the net obligation. Analyze the gross obligations with future finance charges being separately deducted from the total. The aggregate finance charges allocated for the period in respect of finance lease should be disclosed. Disclosure should be made of the amount of any commitments existing at the balance sheet date in respect of finance leases, which have been entered into what whose inception occurs after the year end. The total of operating lease rentals charged as an expense in the profit and loss accounts should be disclosed, analyzed between amounts payable in respect of hire of plant and machinery and in respect of other operating leases. The net investment in finance lease and hire purchases contract at each balance sheet date should be disclosed. The gross amount of assets held for use in operating lease and the related accumulated depreciation charges should be disclosed. Disclosure should be made of the policy adopted for accounting for operating lease and finance lease and in details the policy for accounting for finance lease income. The aggregate rental receivables in respect of an accounting period in relation to finance lease and operating lease and the cost of assets acquired whether by purchase or finance lease for the purpose of letting under finance lease. And now do it yourself. What are the disclosure by lease and explain accounting by the seller's lease. And that's it from session number 3. Thank you.